Afternoon, everybody. Uneducated Economist here. So many people are looking for the rate cuts. There's this hunt for rate cuts. What is it going to take for the Federal Reserve to cut the Fed funds rate and ease the monetary policy? This is how a lot of people are viewing the monetary policy coming from the Federal Reserve, is that there's going to be a slowdown, a rise in unemployment, chaos to ensue, and the Federal Reserve will be forced to cut rates. Now, the problem that I think a lot of times that we end up focusing in on is that we just automatically think when the Federal Reserve raises rates that that's going to restrict the economy, and if they lower rates, that's going to stimulate the economy. But very few people want to take into consideration where it is that the neutral interest rate lies when it comes to this monetary adjustment. So now if we think about what it is that the Federal Reserve had stated many months ago, that they would want the monetary policy, the Fed funds rate, the overnight lending rate within the big banking system, that effective fund rate, they want that at neutral. Now, neutral is a very difficult thing to observe in real time. We don't know if it's rising or falling, but we can tell over time where that neutral rate is, and we can understand that an elevated inflation expectation will pull that neutral interest rate ever higher. So when we start to look at the economy in this fashion, that there's a neutral interest rate in relation to the Fed funds rate, when I think about this idea on the hunt for rate cuts, what does that mean in relation to the neutral interest rate? So if the Federal Reserve was to cut rates, where would that Fed funds rate end up being in relation to that neutral interest rate? Are they cutting to actually stimulate? Are they cutting to get to neutral? Or if they cut, are they still being restrictive because they may be somewhere above neutral? This is the question that people should be asking. All right, but very few people take this into consideration. See, now I think over the last 6 months, what did we experience with the tariffs, the threat of tariffs, the idea of what tariffs are going to do to the economy? It elevated the inflation expectation. In fact, if you go back just a few months ago, you would find that the elevated inflation expectation was going to absolutely destroy the entire economy. I mean, there was so many people out there screaming their heads off about how horrible of an event this really is, but yet the inflation doesn't seem to appear in the numbers. In fact, we're seeing the CPI and many other indications of what the inflation would be coming down. Like, I mean, you can't necessarily like agree with those numbers because they're government numbers that may be made up. But when we think about the direction in which that they are headed, they're coming down, right? They were elevated and they're coming back down to where that target would be. So now when we think about the Federal Reserve and what it is that they were attempting to do with their monetary policy and to try and get that Fed funds rate at the neutral position where they are neither accommodating nor restricting the economy, if they are sitting still with an elevated Fed funds rate and the elevated inflation expectation raises the neutral interest rate, which it may have done over the last few months, it would make the economy less restricted as it starts to rise. Now, this is something that I've tried to share with many people over the last 6, 7, 8 months. I have put this video out constantly sharing this sort of idea. And now when we think about this, the inflation expectation is starting to fall. Right? I mean, there's even, I left a link down in the description from a Fed survey just recently saying that the expectation is now coming down to somewhere around 3%. So again, I think about the Federal Reserve's monetary policy that they were looking for. Elevated inflation expectation to raise the average inflation rate to make up for the fact that they failed to achieve the 2% target over the previous 10 years. Now, I know that's really confusing for a lot of people, but when we think about what it is that the Federal Reserve was attempting to do from their own words to try and increase the inflation, raise the inflation expectation, and then to regain that average inflation over time to that 2% target. Very confusing for a lot of people to then internalize. But just know that during the great financial crisis and all the quantitative easing, the 10 years after the horrible event of the great financial crisis, the Fed failed to produce an inflationary scenario, and it was a very big problem. Here they had the Fed funds rate close to zero and the neutral interest rate was close to zero. Stimulating the economy with interest rate adjustments was no longer an effective tool. With the inflation running persistent through the COVID pandemic, it pushed the interest rates higher. And with those elevated interest rates and the neutral interest rate beginning to rise, this is what gave the Federal Reserve their ammunition. So now, with the neutral interest rate ever closer to the Fed funds rate, when they do drop rates, they can drop them far enough below neutral to stimulate the economy. However, if the neutral interest rate begins to fall on the lower inflation expectations that we are now seeing within the economy and including the Fed survey, even if the Fed was to cut, they may be following the neutral interest rate down, meaning they're not going to create any kind of more accommodating or even less restriction within the economy. They are literally holding their position going down. Very few people look at this. See, how many people wonder why it is that we have such a resilient economy with markets hitting all-time highs? Very few people can explain this. And even though we have some of these crazy events happening with all the uncertainty and fear and doubt that's taken place with all the tariffs and everything, here we have a stock market achieving new all-time highs. We have a housing market that doesn't seem to crash like a lot of people were anticipating when the elevated mortgage rates started to hit the housing market. We're not seeing all the things that a lot of people were anticipating from the elevated Fed funds rate, because most people do not consider the neutral interest rate into their strategies. They don't even know that it exists. And without that knowledge, without that understanding, or that internalizing of at least the concept of it, then it'll be very difficult for you to try and compile all the information to make sense of why it is that we are now achieving some of these record highs. And a strong labor market, even though it's weakening, it's still fairly strong labor market, or high, low unemployment, however you want to look at that. And this is part of the Federal Reserve's mandate. Low inflation with stable prices and full employment. Are we not achieving their goal? I mean, I go back and I look at some of the videos that I had done just recently, or even over the last couple of years, where people said, man, the Federal Reserve has lost control. They have no idea what they are doing, and it's all about ready to collapse. And here I'm thinking, man, that was the exact impression that they wanted you to have, so that it would push that inflation expectation higher. The more you thought they failed, the more they succeeded from that idea. And again, now I look out there and people talk about the hunt for interest rate cuts and what would it take for the Federal Reserve to cut interest rates. Well, since they're trying to be at neutral, the only thing that I can think of that would actually get them to cut rates is if the neutral interest rate started to fall. Then they would start chasing the neutral interest rate down. But if you can create a fear, uncertainty, and doubt, especially through the idea of inflation or tariffs, or the inflationary pressure through tariffs, then you can elevate that neutral interest rate. You can push it up, right? And now we think every single time that you hear this idea, oh man, they're getting it, no exceptions. On this particular day, 100% tariffs, 50% tariffs, 10% tariffs. What the hell, right? What are we talking about here? What tariffs? What are the impacts from tariffs? Because we can't really see that either. There seems to be no impact from tariffs, right? A few industries have come out talking about how it's majorly impact them, but for the most part, you're not seeing the results of it inside of the consumer price index. Now, again, I do agree with a lot of people out there saying, dude, you can't trust those numbers. And I'm the one who's saying you can't trust the numbers too. I did a video talking about that exact thing, FASB 56, legal lies, that you can't trust those numbers. But you can look at them and say, what are these numbers saying about their strategy when it comes to monetary policy? You can use them for that. And by understanding the Fed's monetary policy and what it is that they plan on doing with it, you can better position yourself in accordance for that. I was never worried about the stock market crashing with an elevated inflation or elevated interest rates. I mean, did I think it would come down? No. Did I think it was going to go to a new all-time highs? No, I didn't think that either. But I thought if you have a neutral interest rate that's moving ever closer to the Fed funds rate, that's going to make the economy less restricted. So it didn't surprise me when it happened. Because this is the theory that I have been sharing with you guys over and over and over again. You can go back and look at many videos that I have done talking about the neutral interest rate. This idea, this theory has not changed one bit. And I'm literally like the only one who seems to want to really kind of bring it up constantly. Like nobody else seems to want to discuss it very much. They have this idea that, you know, I think really what it is they're stuck in the idea of the Federal Reserve's old way of conducting themselves with the monetary policy. Very few people realize that they use more of the words, jawboning, or the expectations that the market has to conduct monetary policy as opposed to actually adjusting the rates. Okay, 10 minutes into it. If you want to crash, you will believe a crash is coming. Yeah. What are you talking about? Reset. Did you go to school? A crash will help reset the housing market, which is long overdue. Many of you will want a house someday with an affordable mortgage payment. What will happen, Tom Flo, is that if you have a crashing in the housing prices, there won't be loans being issued for those houses. So if you have cash, you're going to be in a good position. But if you plan on getting a loan for that, you better be really in a good position with a major down payment and very good credit and no chance that, you know, I mean, very little chance that you'll probably actually get the loan, because you have to think if there is a crash in the mortgages, it's because of a credit crunch that is happening and the flow of money is very non-existent, right? I mean, it's slowing down dramatically. So what I would assume is the same thing that's happened every single time you have a crash like this, and that the concentration of wealth will go to the hands of a few. The rich people will then load up, right? Yeah, I mean, the poor people don't get a chance unless they're sitting in cash, right? If they're sitting in cash, and you might have a chance, and if that's the chance, then you're not poor. It's not a good thing to see it happening, and I'm not saying don't take advantage of it. I go for it, man. If you can make that happen. The problem that I think most people will then end up being in is that they're just the available credit will be non-existent to them. So unless they are sitting in a position to pay cash for a house, then I wouldn't wish for it to happen, because you're probably going to end up having major layoffs, like, you know, disinflationary pressures or even deflationary pressures hitting the economy. Work will be very slow. Business will be hard to conduct. Interest rates will be most likely very elevated. You know, like, that's going to be a tough one. The problem that we now face is that we have to understand the Cantillon effect. You have to understand that there was a time that the average person could go out there and build a house. Think about that for just a minute. In 1980, you could work at just about any day job you wanted, buy a piece of land, and then stop at the lumber yard on the way home and piece a house together. Like, anybody could have done that. You didn't need a whole lot of special skills. I mean, you know, it does take some carpentry skills in order to get it done, but it doesn't take that much. Like, you can figure it out. Nowadays, that's not a possibility. Well, I mean, it is, but not really. Most people will never, ever, ever come into that even concept or belief that they will go and build their own house on their own piece of property. Very few people actually go that route. So now think about it. Back in the early 80s, how many people were doing that? How many houses would be available if you could have an average everyday dude with a regular job, buy a piece of land, and then stick a house together over the course of a summer? You could build a lot of houses. There could be a lot of houses being constructed in that fashion. But now, if you have to pay somebody to build a house, they're going to be they're going to get expensive. And then, if it's very difficult to conduct a business building houses, how many people are actually in the business of building houses? It becomes very expensive if you do not have an abundance of people who can build homes. So if you had the average everyday dude who could stop by the lumberyard on his way home from his day job and construct a house, and that's no longer a concept, how many houses could you possibly bring into fruition? It's not the same economy anymore. So now you have people who have to pay other people to build a house. That's a very, very luxurious experience. So if it's a luxurious experience to pay somebody else for a house, that's a luxurious item. And as people think, man, my regular day job should be enough to buy a house. Well, the average regular day dude can't build his house anymore. So no, you can't trade your day job for a house, because the people who work day jobs can't build houses anymore. Think about that for just a minute, right? If you were an average everyday dude who could stop by the lumberyard and piece a house together over the course of summer, how many houses would exist? A lot of them. But if you have to pay somebody to build a house, that's a luxurious experience and only the rich get them. And that's sad, I know, and I don't like saying it out loud because it's hurtful for a lot of people, but I'm not here to sugarcoat anything and make it seem like you got this glorious, easy time ahead of you. It's not that way anymore. It's not going to work like that. You cannot have a regular day job and expect that to be enough, right? I don't like the fact that it isn't. What am I to do about it? There's literally nothing I can do to change anything about anything out there, considering how tough it really is for people to go through. I can't change it, but I can see what it is that needs to be done for you. Like, you need to own it, not anybody else. There's nothing that anybody else can do, but you can own this for yourself. Understand the situation we are now in and take measures accordingly. You know, I was just talking with a buddy of mine. I'm trying to convince him to live in his car. He's a single dude who has money. I'm like, dude, live in your car for a few years. And he's like, no, I'm not living in my car. You know how horrible that is? I have back problems. I would have a horrible background. I'm like, figure it out, man. Live in your car and save all your paychecks and put it into real estate investment trust with high dividend yields or something. I don't know. Just figure that part out, dude. You're single and you don't have anything requiring you to do anything like that. And he's like, no, I am never going to do something like that. And I'm thinking, man, how easy would it be for you to actually put yourself in a position that you can secure an interest far beyond your occupation if you just didn't have a place to live and you lived in your car? It would be absolutely the fastest, easiest way to wealth that you could ever possibly do it, right? But it would suck, right? It sucks. What a horrible existence. Man, that is terrible. But it's only for a short time, just a couple of years, really. I'm just saying, you know. There's a super chat there. Let's go find that. Here we go. Scapiro? Thank you for the $5. I'm not sure where that, what is that? All right. Thanks, UE. Watching your content in the UK, I'd love to hear a few more of your ideas on investments. Okay, so this is the thing. I'm not really an investment channel. I know people really like the idea of investing because they want to be able to position themselves better. I've shared many times what it is that I'm doing, and a lot of times people disagree with it. And I'm like, okay, well, I'm not an investor. I'm not trying to suggest that I'm an investor, and I'm not trying to give you investment advice. So when people say, dude, that's a horrible idea, I'm like, okay, well, yeah, I kind of said that too, right? I mean, I already kind of put that out there. Here's the thing that I've come to the understanding of, right? Trying to time the market, I couldn't do it. Like, I am terrible at market timing. And so I was just like, I mean, every time I was just like, man, now's the time. And then if I sold out, it would jump up or something. It was just like I was always 2 weeks too early, too late or something, but I couldn't time the market very well. So I started dollar cost averaging, and I found that was by far the easiest, most successful way for me to invest, is to put a little bit every week towards a particular investment or in a particular direction, a particular asset. And by dollar cost averaging over time, it's done so well for me, especially in Bitcoin. I dollar cost averaged into Bitcoin for 4 years, and I don't know, it went up like 200% or something like that over the course of that time. It was incredible. Like, I've never thought that I would have achieved that level inside of that so easily and so simply just by purchasing once a week or once a month. Right? And when I started doing that and it started becoming more successful over time, I realized, man, this is the easiest way to do this. Right? The focusing and hypervigilant, trying to do the stock readings and moving averages and all this other stuff is just like, whoa, that is way overwhelming. That's hard for me to deal with. Other people out there, they're good at it. Like, they know exactly, like, look, follow this, these indicators, right? And that's awesome, and they can day trade and they kick ass at it. So I leave that up to them. When I go out there and I pick stocks, I pick into things that I know, like things that I am experiencing personally. Like, I buy into Coinbase. Like, literally, the ticker is coin. Now, I'm not trying to suggest that to anybody. Something that I have been positioning myself in since the initial public offering. I've dollar cost averaged into that one over the course of the last few years, and it's done incredibly well, like so well. And like, I mean, I don't know, 200 and something percent that stock has moved up. The only reason why I bought into Coinbase is because I had been with them for so long. Like, I got an account with Coinbase, I think 6 months after they allowed people to once they opened up and allowed people to have accounts. I think it was about 6 months after that I had an account with them, and I've had an account with them ever since, and like never had any issues with them. To me, they are like a leader in this industry. So yeah, and I feel pretty confident putting some money towards that. Incredibly volatile. Oh my God, it bounces everywhere like you wouldn't believe. So if you can't handle the volatility of it, then I wouldn't get in that one either. So again, like, that's me. I can handle it. I'm cool with it. I've been investing in cryptocurrencies or not investing. I've been speculating in cryptocurrencies for a very long time. So volatility is not a big deal to me. Watching it bounce around all over is just like, to me, it's just another day, not a big deal. Other people get very anxious when that happens and they can't handle that volatility. So again, like for me personally, I don't mind buying into something that jumps around, and if it falls by 20%, I don't cry. I don't get all freaky about it or anything like that. And then really, you think about it, there's many places that you kind of need to go to. Like, you got stock market, you got real estate, you got bonds, you got the cryptocurrencies, you got gold and silver. There's a lot of places, and so you have to kind of understand why it is that you're positioning yourself in those particular areas. I don't know how many times people have asked me, what do you think the silver price is going to be in so many years, and when the hyperinflation kicks in and when the dollar destroys it, what will silver be at? And I'm thinking to myself, I have no idea. I thought silver was going to go to $500 an ounce back in 2011. So to see it at $35 an ounce or less than $40 or $50 an ounce right now, to me, is just an incredible value. Like, there's very little downside risk to silver, but as far as the upside potential, I don't know, I already expected that a long time ago. So I don't buy silver for the move. I buy it for an insurance policy that gets me out of that third-party claim. And by being out of that third-party claim, now it gives me the ability to feel a lot more confident about putting money into a third-party claim like the stock market or the bond market or something of that nature, because I have an insurance policy that says, hey, if this all fails, at least I have something. All right, like the banking system fails, stock market fails, real estate crash, whatever. I have something that's outside of all that stuff. And now very few people take that as a consideration, like that insurance policy away from the third-party claim. Because once you have it, now you don't worry about them anymore. You're just like, hey, if it crashes, cool. This other thing is probably going to kick butt. So it gives you the ability to then move with more confidence into these other things that may be volatile or may be a little more risky and not feel worried about it. On the safer side of things, I invest into a Vanguard total stock market ETF. Very slow moving, doesn't have much volatility to it, doesn't increase a whole lot, but it's kind of steady. And for a position that says, hey, at least I'm involved in it, that's a decent one, but it's not exciting. It's kind of a boring one, right? All right, and that's it. That's all my investment advice. All right, I tried to sell my silver, and the pawn shop offered me $24 an ounce. In my opinion, no one has money. Yeah, that's the problem with a lot of shops, is that they try to undercut you. So you really, like, for me, you build up a network. You build up a network of people who know the silver game, people that who would want to buy at spot price. And so therefore, when it comes time to sell it, you can call those people up and say, hey man, I'm offering up some silver at spot price, or maybe slightly less to entice it. But going to like a pawn shop, going to a coin shop, you're going to have to know you're going to take a hell of a premium. Get to know those people far in advance. Like, build a rapport with them. Don't just stumble in as a stranger and expect to get top dollar for it. Once you have become a customer, somebody who is, built a rapport, built a somewhat of a relationship with that particular store, you're going to find that they're going to offer you a little bit better deal, right? And it may not be that great of a deal, but at least it's better than what they were offering you before. That's how I would do it. And then you can also find all kinds of places online to sell it to. There's many other online dealers who will buy silver, and again, like, it's maybe not be the best price, so just kind of check around a bunch of places, and just, build that network up. All right, YouTube channels, living in a car, making tons of money, get a membership at Planet Fitness for showers, $15 a month. Or live there in exchange for chores or labor performed for upkeep of land and improvement of the land for the payment of the rent. Yeah, there's all kinds of ways. I mean, there's a million ways that you could go out there and figure out how to get your expenses low and your income up. And that's ultimately the goal of it. Earn more or require less. That's the only way to wealth. And so once you kind of figure out that path of what it is that you are going to do to cut your expenses and figure out what it is that you're going to do to try and increase that income, this is generally the first steps that you are going to need to go down in order to get yourself into a position to start investing, because you need the money, right? You need to have the initial money. And even Cantillon explains that back in his essay, talking about there's a group of people who will not increase their living standards at first so that they can accumulate an abundance of money to buy property so that they can get a return, a secured interest of return beyond that of their occupation. That's the mindset that you should be in, right? How is it that I secure an interest beyond that of my occupation? Because if you can do that, then you're going to find that life is going to be a whole lot easier, and that you're like, when you do that, you have income that is far beyond that of your occupation. You're competing against other people who have an occupation like that. If you can increase your standard or increase your income, your ability to buy a higher standard of living is then so much easier against your competition. I mean, it's just earning more, require less. Simple. I mean, I know it's simple, and most people are like, dude, I already tried to do that. I don't think they do. I really don't think people try to do it. I think people, for the most part, will justify going to the bar to hang out. They will justify the expensive vehicle or the payment on that vehicle. They will justify their way right out of securing a interest beyond that of their occupation. They will justify themselves right out of it. And then since they have justified themselves into the position that they had, which is out of having a secured interest, they will then try to justify why it is that they are voting the way they are, because the rich people are greedy and holding them down. Right? And that's a mindset that a lot of people end up having. Living in a car, having a YouTube channel is two streams of income. It kind of is, right? Most people are rationalized beings, not rational beings. Yeah, that's very true. Nathan, I never forgot, in Sacramento, California, there is this very famous beggar who would stand on the corner of Arden in front of the Arden Fair Mall. I own 2 properties. Bills for housing is out of control. Doing YouTube channel in a car is better than those podcast shows. A home remodel can wait a little longer. Yeah, and I mean, I guess it depends. Like, even with a home remodel, that's really forced appreciation if you do it right into your home. That's kind of a way of making money, in a way. I mean, if you do, obviously, if you don't pull the equity out, then it wouldn't be. But increasing the value of your home, in a way, is putting like money in the bank. Right? All right. He stood there for years. This is Nathan talking about the homeless guy with a sign, and he begged for money. In fact, he became so famous that the local news channel did a report on him in the course of filming him for B footage. They actually accidentally filmed him after working his bathing shift, walking over to the Arden Fair Mall and getting into brand new Mercedes-Benz and driving to his giant home. All right. So-called beggar drove a brand new Mercedes and lived in one of the nicer neighborhoods in Sacramento. Yeah. An in-ground pool and deck, a new kitchen, and an addition are the only things that add value. A ground pool deck. All right, a homeless man should have managed his money better. What if he didn't even earn any money to begin with? What if he was raised in a horrible existent family where they booted his ass out the day he graduated with no help from anybody, and he was out on the streets with a backpack and nothing else and nobody to help him out, and he was on his own? Like, what if he never had money to begin with? Yeah, I mean, I know a few people who ended up that way, doing that exact thing. Like, they never had a job, never once ever had any money. I bet you they never had more than a few $100s at any given time. That sucks, right? And that's why you got to have good parents. If you don't have good parents, man, it's a horrible existence out there. You got to, you end up being like, in nothing but survival mode the entire time, which makes it very difficult to find abundance. I mean, if you were in survival mode from the very get-go, from the day that you were born, your parents treated you like hell, you were constantly in trouble, you got in trouble with your school and the police and parents and the rest of everything else out there, and you were constantly trying to fight for a position, and you were living in this survival mode, you have no idea what it's like to live in abundance. Very difficult road. Very difficult road. Right? It's hard to feel anything else. And so, when I hear people say, oh, they could get a job and all that, no, they can't. No, they can't. No, they can't. They got to go through a lot of therapy to figure out what it is that's going on in their head that get them out of the survival mode, because they're going to be anxious and angry and fighty and, depressed and all the other stuff that goes with it. So, no, they can't just go get a job. Yes, God, family, then country. I got lucky and joined the military. There's a good one, right? Military will snap you into, snap you straight. All right. Never got child support, sucked hard. I bet. My ex was a vet. So they must have not have worked at all after that, huh? Best decision I could have made for my situation. What was high mileage? Oh, the military joining, yeah. Question from Felix, the cat 69 says, question, how long before I'm rich, Simon? You're rich right now. It's a mindset. You're already rich. How long before we get there? Today, you're already there. Are these guys just trolling or what? They are. They absolutely are. Confidence in the dollar around the world is waning because of the administration. I think it was already waning before the administration, right? I mean, come on. Like, they talked about the dollar failure and countries getting out of the dollar and hating the dollar long before Trump came into office. All right, the dollar has lost 10% against other currencies since January. Yeah, but that's really relative. You think about it, the dollar index is much higher today than it has been in the past. So to think that it's like down comparatively to all of history, that's not accurate at all. In fact, the dollar is quite strong considering the basket of world currencies that are out there. All right. Do you feel the ground level confidence will be back? Absolutely. Here's the thing about it. There's nothing else out there that even gives you the option to be confident in. Think about that. There's nothing out there for you to have an option to be confident in. Nothing. There's literally nothing. And anybody who tries to say, well, I'm confident in gold. Well, yeah, you may be, but that's not enough for everybody else to be confident in it as well. That gold is not enough for you to be confident in. You can be personally confident in it, but you're not going to be able to pay your bills with it. You're not going to be able to retire with it, because retirement means that you need to get a secure rate of interest. I mean, you might be able to sell your gold off over time and live, but eventually it'll all be gone, and who knows how long you're going to live. See, this is the problem that most people are going to end up facing when they think about the dollar failing, is that there is nothing out there to replace it. Here's the thing. The dollar comes from the U.S. treasuries, from the U.S. government debt issuance. The amount of U.S. government debt issuance cannot be matched. There is nobody out there who is going to go into debt as deep as the United States government has done. Nobody is willing to do that. Nobody wants to do that. Now, if you do not go into debt to the level that the United States government has done, then you cannot produce the safe and liquid asset to replace the U.S. treasuries. Without a safe and liquid asset to replace the U.S. treasuries, then you're not going to be able to do the transactions that people are wanting to do around the globe. There will simply not be any money to do it with. We must understand this. In order for there to be a failing dollar where it doesn't exist anymore, there has to be a replacement for it. Otherwise, everybody suffers in poverty and misery and depression and dies. So that's not the case. Maybe it is the case, all right? So you have Mad Max, 100%, like no government whatsoever. That doesn't exist, and you have this chaotic, time. And okay, so you got that. Let's set that aside for a second and think about the reality of the situation. You have to replace the U.S. treasuries. That means a country has to step up and say, I'm going to issue out the safe and liquid treasuries to replace the safe and liquid assets to replace the U.S. treasuries. What country are you going to trust to do that? Go ahead and think about it for a minute. You want to trust China to issue out that safe and liquid asset, saying, hey, go ahead and put your entire retirement into this safe and liquid asset, and we promise we will not default and you will get paid. You want to trust China with that, or do you want to trust the United States with that? Like, I know you don't want to trust the United States. I'm just saying pick somebody else then. Do you want to trust Brazil? How about Russia? You want to trust Russia? India? No? Don't want to trust anybody else but the United States to issue out that safe and liquid asset of a U.S. Treasury guaranteed to pay, zero chance of default? I mean, I don't know any other asset out there that holds that sort of level of confidence. I can't think of anything, right? Now, you can go with gold. Gold has a lot of confidence to it, but you're going to limit the amount of transactions and people are going to suffer in poverty and misery and die. If you don't believe me, just go read the Cantillon essay. Chapter 6, 7, and 8, the increase and decrease of money to the state. It's a very simple process on how it goes down. The most industrious people of the world will hoard all the gold for themselves, and everybody else will be living in poverty and misery. Take on the idea that the dollar is about ready to fail and that nobody wants it and all that. That is a very common belief. It's a very, and it's not even outside of the realms of possibilities. I'm not trying to even say that. What I'm going to try and say and try to get other people to think about and come up with a response for, tell me where the replacement is. Where is it? How is it possible to do the amount of transactions that are happening right now using dollars, which is an insane amount, considering that there is transactions that are happening in dollars that didn't have anything to do with the United States. These are nations that wrote up contracts that are due in dollars. That's not anything to do with the government, our people, our banking system, nothing. Doesn't have anything to do with the United States whatsoever. It's a contract from one foreign citizen to another foreign citizen, or a country to another foreign country that is due in dollars, and then they use that contract like it's dollars. They can create money all on their own. They can create a transaction using dollars and never once ever touch the dollar. Do you know how many transactions are being done in dollars? It's insane. It's almost impossible to wrap your head around how much. And so all of a sudden, there's going to be an abundance of currency to perform all these transactions from one of these other nations who are not willing to go into debt as deep as the United States has done. How could they possibly do it? It can't. So you have two choices. Either don't do transactions or do them in dollars. Right? Or maybe occasionally you might be able to throw a rupee in there. Right? A ruble, maybe, if you're dealing with those guys, the yuan, occasionally, but there's not enough of those currencies to do what the dollar is doing. You decide that you're not going to do a transaction in dollars, transactions cease to exist. There's not enough of those other currencies to fill in the gap. Even if you wanted to, it's like, let's use all these currencies together. It's like there ain't enough of it to fill in the gap. So it's not going to happen. Not anytime soon. If you could show me a replacement, then I would say, okay, I disagree with my theory and my thesis and all that other stuff. There is a replacement, and here it comes, but I don't see it. I don't know where it's at. What I see is stable coins coming up to replace the dollar and get cash out of the system and taking interest rates into negative territory, and we will forever be locked into the dollar at that point. That's what I see happening. And then, you know, on top of it, people are like, oh, well, there'll be a day when it crashes. And I'm like, okay, great. Like, you know, I've been hearing that for a long time. Let's prepare for that. We got our gold and silver. We got our insurance policy. We're ready. Let it crash. Let's move on to figure out what it is that we need to do with a currently existing and continuous system. All right? Because that's what you need to do in order to better put yourself in a position and in order to acquire an interest beyond your occupation, is you got to believe that there is not necessarily a crash coming tomorrow. If there is one tomorrow, position yourself for it and then move on. All right? Because living in fear and failure or waiting for failure is no way to invest. You invest for success, not invest for failure. You insure for failure. All right? All right. Where in life does a guy get a mindset of investing their money into cash return assets in effort to replace their income? Is it supposed to be assumed knowledge and all market works against it? Justin, that is the $1 million question, bro. How do you do that? You know, I know a guy one time, he told me, he says, you know, I invest in these poker machines, and then a guy rents those poker machines from me, and so I get a little bit of rent off of these poker machines, and I get a little bit of the take as well. Holy crap, talking about getting a return on your money, that's a brilliant way. I never even thought about something like that. Like, to me, I'm thinking rental properties, dividend-paying stocks. I'm thinking, you know, side hustle businesses that I can go to. I'm thinking all these other things. And this dude's buying poker machines and then renting them to somebody else. Like, you know, they're paying him to rent the machine, and then he gets a cut of it, and he doesn't have to do anything except for buy the machine. I'm like, man, some people just know how to do it. You know, some people just really know how to do it. Yeah. See, that's a way to do it. Like, get creative. Figure that out. I mean, there are so many different ways to try and get a return on your money. That's where the creativity comes in. The simplest ways is things like rental properties or dividend-paying stocks, right? These are both places that have a return on your money. They will actually send you money for having these things, right? And so think of stuff like that and build that up over time. Is a dividend-paying stock is like going to pay as much as a rental property does? Well, if you have enough of it, it does. I mean, you might have to put a lot of money into it before it actually gets to a point where it will pay you a living wage. But then again, what is your living wage needed? And, you know, depending on how many stocks you buy, it may not be that much. What time is it? Oh, I gots to go. You guys are awesome. Thank you very much for being here. It really started to kick into gear here towards the end of the stream. We got 209 people watching with 63 likes. Be sure and hit that like button. By hitting the like button, you support the Uneducated Economist by getting this video to spread around the internet and get more views on the channel, get more subscribers. Thank you, everybody who has been joining the podcast. I have a podcast now where I put all these videos into audio form, so if you'd rather listen to the video as opposed to watching it here on YouTube, there is a podcast now that you can go to listen to all these videos. Thank you, everybody who has joined the Patreon membership and the membership for the channel here on YouTube. This is great ways to continuously support the Uneducated Economist on a monthly way without having to, you know, put out a ton of money. $1 membership here to the Uneducated Economist YouTube channel. And also the community page is now open for subscribers to post their own, you know, thoughts and ideas of what it is that's happening here on the Uneducated Economist community channel. So let's advance that. Let's, you know, continue the conversation there. And again, you can share your ideas and posts as well. Thank you very much, RB, for the $3. And You guys are awesome, but I got to go back to work. Uneducated Economist, you let me know.